Hello again, everybody. It's Harry Boxer, the technical trader at thetechtrader.com. It's Thursday night, June the 29th. And after a nasty morning on Wall Street, the markets rallied late in the day. But you can see from the patterns, we've got some nasty breaks, particularly on the S&P. If you look at this pattern here, this is a left shoulder complex, a head, and a right shoulder complex, or a rounding top, whatever you want to call it. Support at 24.1920 was taken out, and then snapped back to, and then pulled back to. We closed essentially right on old support that needs to hold. And you can see that 24.25 on the hourly chart right there is resistance along with 24.30, and then we're up there. But on the NASDAQ 100, it's a different story. If you take a look at the pattern, intraday was the same. Gap down, 5 steps down, then rally back to resistance. But on the hourly chart, it looks a little different in that after a steep drop and a rising wedge, we had a pretty nasty decline, which basically is 1, 2, 3, 4, 5, and then a pop, and then 1, 2, 3, 4, 5 intraday. So it's 2 days in a row, and we have, but essentially it's 3 waves down. And now today was a 4th wave, potentially back up again. I don't know if we extend tomorrow or not, but if we don't, the nastiness is that this thing could come down, and I have a support level around 55. 25.30, that if the 5,600 level is broken, we could see another 70, 75 points down on the NASDAQ 100 before it finishes a 5th wave down. So we have some work to do technically, and we have some key observations to be aware of tomorrow, which is the last full trading day until Tuesday. Monday's a half a day. I may be here, I may not, but for the time being, I've talked to a lot of people who aren't going to be around, so it may be a little fruitless tomorrow. We'll see. Let's go to the charts of the day, both long and short. First of all, Citibank, or Citigroup. I'm an old timer. I used to call it Citibank. Well, the bottom line is it's a 1, 2, 3, 4, and the 5th wave may have started today. This is a big thrust and breakaway gap. Of course, it was relative to the bank stress news, but this here is a beautiful pop and flag, and then another pop. If you look at the length from there to there and the length from there to there, it may need to settle down and consolidate, although my near-term target is around 69.5 if we do get an extension on the banks. If it pulls back to 65, 5.25, could be a buy for a move up to that level at a later date. And a long-term or more intermediate term, I think we can get to 75, 78, maybe 85 at some point. Cons, well, broke out of a wedge today. It was up $1.05 or almost 6% in this market today, which I find admirable. Very admirable. Nearly 800,000 traded. One of the best volumes on an up day in about 2.5 weeks on a breakout of the wedge. What we need to watch now is this level, about 20. Through that level, you're looking at 21.75, and then we're on our way to high 20s. So this could be really intriguing and something to watch with 11.1 days to cover. ImmunoGen did very well today, but as indicated yesterday, the top of the channel is right in here, around the 7 area, and it got up to 740. Pulled back to 722 at the close, but even that up 22 cents or 3% on a lousy day is always a good sign. However, it is overbought short term, and it could be vulnerable to a pullback, or momentum could take it to 8.5. There are, as I said, 5.25 days to cover on that one. NXTD, interesting low price stock, popped yesterday, gapped and ran sharply today, and closed at the high for the day going away, and yet is even up higher in after hours as it reached over 3.5 before pulling back to 295. So you can see it's trading up in that zone. It may very well, if it has any kind of momentum follow through tomorrow, we could see $4 or better tomorrow. Something to keep an eye on. SCSS on takeover talks popped out of the wedge and ran sharply and closed up 362 or 11%. Again, relative strength on a lousy day is always something to pay attention to. And you can see that that one certainly had that kind of a day. Now, 37 on a weekly chart is extreme key resistance. This goes way back here to 2012. 35 and change, 36 and change. Today's high, 35.60. There are 4 tops in here. And if this thing breaks out, this could extend substantially. 7.5 days to cover. Little Specs is kind of similar. Base breakout and explosive move today with a breakaway gap. Now, it is up against resistance. But should it get through here, it wouldn't be a shocker to see this explode and make a big, big move. Now, I don't know if that's called for, but with the momentum the way this is and with 5.2 days to cover, keep an eye on that one tomorrow morning. Trivago, with an unusually strong day on a day like this, up $1.82 or 8.7% on the biggest up volume since mid-May, breaking out to new all-time highs across a double top. I find that very intriguing on a negative day like this. Near-term target, 24.5. Longer-term target, high 20s. Intermediate term. The UVXY, I want to show you this pop. It popped explosive. Obviously, one of the better day trades we've had. This thing went from 9 to almost 12, 11.79. Got right up near the resistance and the moving averages and backed off quite substantially to around $10 at the close. But it traded the biggest volume in its history, 115 million shares. Never seen that before, ever. That tells me if the market goes lower, that this could be up again tomorrow and challenge that 11.5, 12 range. Let's keep an eye on that. And lastly, on the long side is VRX. One of our swing trades made a new high. And the significance of that is it went out above resistance and almost challenged the 1865 level by reaching 1825. So that's a big resistance zone that could cause some pullback consolidation. And yet, I'm thinking that this may be a brand new uptrend underway and maybe developing. If it does develop, and we have an angle like that, then any pullback consolidation could lead to the low to mid 20s. I'll look at the box of shorts and some of the ones that I wanted to point out to you that did, had a good down day today. AZO has broken and broken hard. Take a look at this. Head and shoulder rollover, snap back, breakdown, pop, and then lower lows. Today this dropped 935 or just under 2%. But, and here's the key to this, on the weekly chart, this is the lowest level since November, December 2014, at almost 2.5-year low. My next target, well, even though there's some support down here around 5, let's call it 545, 550, eventually I could see this 5505, maybe even lower, possibly down around 495. That would be my target. Aspen. AZPN, you can see, got a massive double top, broke the neckline, formed the bear wedge. Today dropped $1.51. There's some support at 52, but I'm looking for 48 and 45 going forward. Central Garden, CENT, broke down across the rising channel, could not get back to resistance, and it's formed a beautiful bear flag. I might put this out as a swing. I believe it's going down to 24. Criteo breaks down, rising bear wedge or bear flag. Today it may have broken that, but dropped $1.30 or almost 3%. But I'm looking at 43 and 37.8. Cyber Optics. It's come down. This was a box of short right there at 25. Target was 19.20. We reached 19.5 and bounced. Now another bear wedge. Methinks it goes down to 17, maybe less. EBIX. Well, it looks like a broken channel here and there, and now a bear wedge that may be breaking itself. Today it dropped $1.60, and if this thing gets under that line, which would be about the 52.40 area, not that far away from it, we could drop to 49, 45, and even 42.5. Those are my targets. IPHI, well, this box of swing shorts working as the head and shoulders broke, the snap back to resistance right there. The breakdown from the flag, one more retest of the trend line, and down she goes. Today it tested this low and bounced a little bit. It was down $1.61 or 4.5%. But I believe you're looking at 29.30, maybe even 26. New box of swing shorts, Shopify. I just had to do it, folks. It's just the perfect head and shoulders. Let's hope it works. Sometimes you anticipate a head and shoulders because the neckline isn't broken and it runs up and turns out to be a wedge. But this channel broke, and that channel has been in force since December. So you got a 6-7 month channel that's forming a head and shoulder top with the volume patterns in play. And if this collapses, it can collapse quickly. First target, about 72.5 and then 63. Seagate, STX, broke down from the bear flag, drifted lower, one more test, and now down she goes. Next target, 35 and then 31. VMware, look at this crack today. Rising bear wedge after the breakdown, and then a drop right down to support today. We break there. We're going to 82 and 77. Veritiv, still a box of swing short, and this large wedge is developing. Should it break, 1, 2, 3, 4, wave 5 is coming to 35. In my opinion, 10 points potential. And lastly is Yelp, which is forming a really nice bear flag. And if this one cracks, I can see 23. We're about 7 points from here. And folks, that's it for tonight. Let's see if we can make some money tomorrow, the last day before the holiday weekend. Good night, everyone.